Hey.
Hello.
Hey man, how are you?
Doing okay?
I am good. I feel somewhat out of place without a cowboy hat, but
Hey, we'll get you one in the drawing, man. Don't worry.
It's a thing, man.
Yeah,
Everybody's doing
I
it.
know.
it'd be great to kick off with your background, man.
Before we do that, let's kind of do like a 3, 2, 1 action.
Your action,
Right?
whenever. It doesn't matter.
Okay, here we go. Ready?
No.
Oh, come on. Give me a 3 countdown.
We'll just do it like the Oscars. I come
There you
on and slap you too, and just do
Yes.
it like the real way.
I
right?
need the person with the hook thingy to pull you off the stage.
Exactly.
Yeah.
Okay.
Yeah. Yeah, man. Love to hear just a little intro from you, your background. I think it's interesting. And I'm really focused on kind of the people that go between both sides. I've been on the vendor side, I've been on the bank side, I've been in the BaaS space, right? It's a unique perspective.
Yeah, I got to say before you get started here, guys, I'm so fired up about this. This is so cool when we get one of the premier sponsor banks, banking as a service banks, that the old guard that built this stuff originally come up with the ideas, got this thing rolling, hooked onto a tiger. Just the whole story is so cool. Man, we got Robert Keil here, Sutton Bank. This is awesome. Tell us about it.
Good. Actually, it's pronounced Keil, the German way, but
Well, how about that?
yeah.
Almost time I never pronounced his name right.
There you go.
Yeah, so that actually goes back a little bit to my background, right? Because I actually was born and raised over in Germany, and that's why when I came to the US, I didn't change either the spelling or pronunciation of the name. I just kept it as Keil. But when it comes to background, it started over in Germany where I did schooling that was actually bank specific, right? They have some special programs where you need a sponsor bank that then sponsors you to go to banking school, and you're like school for months. You learn everything about import-export financing. Then you go work hands-on with the bank. Then you go learn all things stock market. You go work at the trading floor of your sponsor bank, and you do everything that German banks do or used to do, right? And that was the degree, the diploma you needed, at least back then, if you wanted to be the CEO of a bank or credit union over there. But
Interesting.
30 years ago,
It's like writing itself. I didn't know. all
That's
that.
cool.
Yeah.
but yeah, so then 30 years ago, I came to the US and at first struggled to get back into banking. Nobody knew what to do was my educational background, right? I remember there was one bank here that said, who wants to hire someone as a teller, which I was applying for just to get back into it. Who wants to hire a teller that might be more qualified than the regional manager? And so it took me a little while to get back into it. But then in the late 90s, ended up working for Northwest Bank, which became Wells. And there, I moved into the payment space where, was focused on all things issuer processing for other banks, credit unions, and left there, spent 17 years for US Banks, Elon Financial Services Division that was doing all sorts of issuer type processing, and eventually became part of the leadership team there. And then after I left there, I spent 4 years at Fiserv, where I actually built out Fiserv's FinTech channel. And that's where we initially met, right? Last year then decided to come to Sutton Bank, which was one of my 2 favorite sponsor banks, where I sent fintechs for sponsorship. And when the opportunity opened up to run the payments division for Sutton Bank, it was pretty easy decision.
What? I've got the first one.
Okay.
I want to know the differences that you've seen, right? Because he's a good example of somebody who's kind of flipped, especially in your earlier years, between being a banker, being a vendor, right? And jumping back and forth. And you having done that. What misconceptions did you have, right? Or is there stuff that was key learnings from one side to the other as you've kind of jumped around?
I'd say I'd had one of the biggest eye-opening moments is, on the processor side. Yeah, I set up a bunch of credit card programs for fintechs, but never worried all that much about what do the sponsor banks really do in there, right? What's needed from a compliance perspective. There's a lot of stuff I took for granted. And there's been actually quite a few aha moments for me where it's like, at first glance, you look at something like a secure charge card and you think like, where's the risk in that? It's like the easiest program to run. And then you talk to people that are, former regulators, and they walk me through, and it's like, oh, holy cow, this is unbelievable. What kind of risk you have, and all the things you need to do to mitigate it properly, that even a secured card actually can become, low risk or low moderate risk. It was really an eye opener that something like that could be a moderate to high risk on the credit side. Right?
One of the things I've always told people about, being in the sponsor bank business, or being in the fintech business, or even the product, to a bank business, ultimately, so I'm going to say this really eloquently. You know how eloquent I am
so
anyway.
sure.
They don't give a shit. The regulators regulate you, the bank.
Right.
Mhm.
Look at the sponsor bank, and they're like, well, they just take a cut. So we really did all the thinking around here. You've taken a cut of my stuff. And so how hard can it be?
Taking all the bad part.
But you're taking all of the risk because you're the one that's being regulated as the banker.
Yep.
I'm taking none of the risk, even though I can tell you I can do KYC. I can tell you I can do all these things. I'm not the one being regulated here.
Mhm.
You are. So with that shift in focus of, like you said, you set these guys up, and then you get over here going, we hold all the risk. That changes the game.
But it's odd, and I'd love to hear your thoughts, Robert. I've always been a little surprised, just the culture of vast institutions. They look at fintechs like customers, right? They're very fintech forward, like the fintech's always right. Whereas I look at it from the other side and talking to fintechs, I mean, they come begging, how do I get a sponsor bank? Please help me. And you guys see it, right? Why is that? Why is it? Why does everybody cater so much to what's best for the fintech rather than forcing them into our banking processes?
Oh, I think that is because of some fundamental misunderstandings, right? Of how you properly protect against the risk. And I would say that until recently, probably Sutton fell a little bit into that mindset too, into that trap. And I think in general, you look at community banks, focus is always on the customer, right? Let's make the customer happy, bend over backward to do it right. And that kind of carries over when it comes to dealing with fintechs. And I think it was just until recently when the regulators provided some guidance and guidelines, where it was made really clear that they're not a customer, they're a vendor, they're a service agent to you. So the same way that you oversee one of your branches to make sure that your employees are doing things correctly, you need to do with those fintechs. And just to give you an example how that is really affecting how Sutton Bank is going about doing its business when it comes to the credit aspect of things, third-party lending. We kind of going through some initial work to set that up, working with some pilots. And a quick and immediate takeaway for me has been, going forward, somebody wants to do credit with us, you got to go and provide me, before we even talk, a third-party assessment that you are credit ready, that you have your act together, you know what you're doing. And so now, on the debit and prepaid side, we've gotten quite big, and I'm starting to do some pruning where I'm gonna shed some of the programs that are more of a drag and sometimes resist proper oversight. But when it comes to who do we bring in the front door, we're actually going to take a very similar approach. I started to reach out to a couple of third parties that can do similar to credit, like a debit readiness assessment. It's not throughout the implementation process I want to take on the battle over, do you have to write Reg E policies and procedures? Do you have to write templates and whatnot else? I want somebody else to really poke holes into that. Mm-hmm. and basically provide something that says, yeah, these guys have their act together. And if somebody, frankly, doesn't want to spend the money to do that, this might not be the business to be in, right? Or at the very least, I'm not the bank for you. There's maybe others that are willing to go through the hassle of battling with you back and forth on what's needed. But
very interesting.
That's where we're getting stricter, right? And maybe the other thing I could point out is in January, there was this event down in San Francisco, kind of a roundtable type setting, and Yelena McWilliams, I think was her name, the old FDIC chair, was there just on her last couple of weeks. But she made a comment that was really interesting because, it all talked about fintechs not being regulated. And she said, well, they are regulated. It's just that we become, as the bank, the de facto regulator, right? So just because you have fintech doesn't mean you can avoid the scrutiny that everybody else has to go
That is
through.
part of
Love
what,
that point.
okay, so this is great because that's what I've always felt is a part of what they're paying for. So when you get, the sponsor bank gets their cut, whether that's interchange or fee income or whatever, that money that's going to that sponsor bank, I'm paying for regulatory, I'm paying for the regulation that goes with that, the customer, they're my customers, not yours.
Yeah.
And so I'm paying you as a process, as a service here. And the thing where a lot of bankers get like, oh, I don't like these guys, they're enabling the bad guys. And it's like, I'll tell you what, if they don't, I will. So there's 100 other people that are going to do this. They're going to get serviced. And the smart play here is to become a sponsor bank. I get so many calls of bankers wanting to become a sponsor bank. And we talk so often about,
What's the number one question?
how do I get fintechs?
I bet you get 1,000 a year. Is that
Right.
fair? Like you probably hear from
Yeah.
1,000 a year that want to come use Sutton as a sponsor.
Yeah.
Yeah,
There-
in 20 some years in some form of revenue generating roles that I've held, sales managers, chief revenue officer type roles. This is the first time where the one problem I don't have is a lead problem.
Right.
It's more what's the selection criteria, right? Where we say, okay, we're interested in talking to you versus, you know what, you might want to talk to a program manager that, can take you on, but we're not the
Well,
right
and
fit.
also
There's only
Sutton-
75.
Sutton is in a really unique spot. They're what I would call the elite of
You
the
bet.
sponsor banks. So you've got, a handful that are the elite. And so there's a competitiveness here.
But very
for-
differentiated, we're starting
Okay,
to
so
see.
we're gonna give you a vocab lesson right now. So
Yep.
what we call a fintech guy that comes along and like turns into a monster, right? When you get $1 billion in valuation, they call them a unicorn. Then we have a multi-unicorn, multi-billion dollar unicorn. Okay, so the big guys in the sponsor bank world, not necessarily the
Of-
biggest assets.
Of the 75 sponsor banks, let's
Yeah.
say a dozen that are really rock stars.
That's fair.
Right.
I would think that's fair. About a dozen are the major players, maybe.
If
even
you
less.
include credit in that, if you focus just on debit and prepaid, I'd say there's maybe 5.
Right.
That
Yeah,
really-
I agree.
I agree. Hey, I didn't want to be the one, but
Yeah,
okay.
yeah.
So the competition for these unicorns is pretty intense. And then there's beginning to be like a little bit of I'll use this guy for this particular debit. And I'll
Very-
use this
very
guy over here for
differentiated.
account opening. And so even a unicorn fintech can
Could
have
have 3 or
multiple
4
sponsor banks,
sponsor
right?
banks.
And so part of this misinformation or misunderstanding that we see a lot in the banking side, the fundamental question of if I became a sponsor bank, how do I find a fintech? That's like a duh. Now, the next one is there's the old guard, right? Fair.
Rock stars.
And then there's the, how did you do it?
Mhm.
And then the more fair question, I think, is if you had it to do over again, knowing what you know now,
Would you
and
do the
you've come
same
from
way?
the bank side to the Fiserv side to
Yeah.
the Sutton side, fintech, all about, you've seen the whole game here. And what we kind of tell people a lot is that there's a cheaper, easier way to do things when you're spinning it up today, because now there's not an unknown about who's going to handle the compliance or what's going to happen here or there.
Rarely in
You know it's
banking,
on you.
rarely in banking have we ever built anything right the first time. Right?
Yeah.
That's kind of how we do things.
What do you
Yep.
think of that?
Yeah.
So I'll give you a slightly long-winded answer here
I love
on
it.
that, right? Because to some degree, what I'm doing now is very much affected by experience from the past, right? And the one event that kind of, when it comes to compliance and what do you want to protect against, that always shaped my outlook on this was a few years back. Indirectly, I got pulled in. It was kind of goofy, but there was a sponsor bank for merchant processors out there that was a client of mine on the issuing side, but they sponsored one of the top 10 merchant processors in the US at the time. And it was one of those deals where, somebody at the merchant processor knew someone at the bank is like, hey, can you be our sponsor? And the bank said, sure. No idea what to do. And it got to the point that regulators visited the bank and said, you have 30 days to exit this. And I mean, to stand up a new sponsor relationship in 30 days is next to impossible. And you had a situation where a top 10 merchant acquirer almost had to close shop. It literally came down to like a couple minutes before the clock strikes midnight. They had everything in place to move things. But that always kind of taught me how important it is to to cover all the bases, to be aware of all the risks, because in that case, it was a bank back then, about $1 billion in assets, and regulators look and say, like, potential obligations you have, you're way outsized, right? And then the other event somewhere around there that shaped my thinking is when I worked for US Bank, for Elon Financial, at one point, all the different regulators teamed up and said, let's do an audit on some of the key service providers to banks and credit unions, so that when the individual examiner visits XYZ bank, they can say, oh, using Elon, don't have to look at that. And so I got pulled into that, and it was just a joyful couple-week-long effort where we met. It was the Federal Reserve that was the lead agent, but they represented the OCC, they represented NCUA, the CFPB, all the regulating entities. And one of the outcomes of that is that one of the competitors at the time, actually, the NCUA, credit union agency, said, you cannot do business with that particular vendor because they're not handling the compliance quite right. And so those are things that have always shaped my thinking. And while, on one hand, I'm a sales leader, revenue leader, that's important, but you got to make sure that you don't inadvertently get yourself in trouble with regulators. And so what, I would recommend to
you sink the whole damn ship that way.
It's like the old securities
It is.
job. Yeah. Yeah.
It's like you work so hard to build a business and then it can be toppled overnight, right? And so what I would do if I were to start in that business is I would really, really focus on putting the right staff together that, first of all, understands this business model. It's not as easy as saying I'm going to hire, a former BSA officer from a big bank. Very different mindset dealing with fintech, right? And not everybody can, adjust to that. But I would probably hire someone experienced in the space that deals with BSA AML, somebody else that's very, very familiar with Reg E or Reg Z if you're playing in credit, and then put the right infrastructure in place that while you have your own staff that can do appropriate monitoring and ensuring compliance, that you also build the ability to augment your own staffing, right? That you have some third party standing by where if it's just at the point where it's too much for existing staff, not enough to hire someone, outsource it, right? That way you can keep scaling and not inconveniencing your customer base enough, too much.
Let me kind of jump in here real quick. The reason everybody, if you're not quite tracking with us here, when we talked about, Reg Z and Reg E, and, so if you're a fintech player, typically the way that you're, think of this like an app right on your phone. So how are we going to make money? Well, hopefully we're going to issue all of our customers a debit card and we'll make interchange, right? So we're now on Reg E.
First time I've ever heard that business model.
Right.
That's a good one.
And then the other one is, okay, cool. I'm actually going to be processing a bunch of loans. I got a buddy of mine that runs the VA, or I've got a buddy of mine that does whatever, runs Rocket Mortgage. And he's like, gosh, really need to run these to a bank so we can sell them, right? All right, well, I could process those in one side and sell them out the other side and keep a piece of this fee income. So that's why we need to be focused a little bit more on the Reg Z sides here. So all of these different reg focuses depend on what type of sponsor bank you want to be, or if you're going to be focused on asset side fintechs or card side fintechs, or both. Fair enough?
Yep, absolutely.
Very different shop. Yeah.
Yep. Oh, totally. And so
understandings, I think, are tough for people to really get their arms around.
And the simplest misunderstanding that the three of us would just die over. We've all known fintechs to be something for the last roughly 10 years. And now you've got all the big vendors calling themselves fintechs, right? Like, is my dog a fintech? I mean, I promise the large cores are not fintechs, and so the vocab has gotten muddled. And so now you've got a lot of banks, and you've got, I'm going to start on surveys, right? But it's like 80% of banks are using fintechs, and it's like, no, they're not.
Well, what happened, man, is that early in the game, it was like really uncool to be a fintech.
That's a scary word.
And then all of a sudden it got really cool to be a fintech. And so it's like, hey, I'm a fintech, you're a fintech.
Exactly.
Robert's a fintech.
There you go.
Yep. So, everybody wants to be one, half for sure.
Well, and this process right here we're talking about, this is a really cool conversation, because we, in the last 2 minutes here, have talked about what is preventing more sponsor banks, which is the number one thing we need, is more sponsor banks.
Yep.
And what's preventing them from entering the game, or what slows down the process of them going, hell yeah, I'm on board. Doesn't sound so tough. This complicated conversation and everybody, well, I'm a fintech and what's an ad?
Well,
It's like,
I'll
guys,
give
it's
you an
not,
easy way.
it's not that hard to
Quick.
get started.
Quick data time out here, just to level set. I didn't pull the numbers this morning. I should have, but there's right about 75 sponsor banks and about 375 fintechs in the US that are running through those 75 sponsor banks.
Performing a banking function.
Performing a banking function. There you go. That's not counting the thousands of vendors, right? And I know it's not a fun partnership style word, but we'll just leave vendors and fintechs as separate for today.
Yeah, and keep in mind too, we're taking out reg tech, insurance tech, everything else tech.
Sure.
We really try to focus on the fact, if I was a bank,
And you need a charter.
and how do I use my charter to do something, and what kind of operational things are out there that are doing banking functions? Are they friend or are they foe?
Sure.
What do you think?
Good question.
Are the fintechs friends or foe? Is that what you're asking?
Yeah, the ones that actually perform a banking function.
Well, I personally think to the community bank like us, they're a friend. If you're a top 5 bank, they're foe, right?
I love it.
Yes.
Yes.
Yeah.
That's the thing.
You want to fight?
I mean, I think
become a sponsor bank.
There you go.
exactly. I mean, I think you probably
We're done
saw
here.
that Jamie Dimon, was it 2 years ago? Jamie Dimon went on record where he talked about the fintechs that are scaring him.
That's,
Less, right?
he talks about it all the time.
I tell people, I said, what he really meant to say was he's scared to death that you are going to become a sponsor bank,
That's right.
because then you have the fintechs that tear him apart.
That's right.
I've never been to a small town where the guy said, yeah, we lost so many customers to Chime, we had to shut down our little bank.
Never.
They don't even know anything about it or care, but it does affect those guys.
The big guys.
Yeah. You know, and I think it bears repeating here in this setting too. I mentioned it to you guys when we talked on the phone, but I think the beauty of fintech is for a small bank like us, right? We're in rural Ohio. We have 7 branches. Partnering up with fintech is one way to change on a nationwide level how people go about getting their banking services, right? There's lots and lots of communities. Sometimes, you know, it's communities, sometimes it's certain areas that have been, you know, not served well by the traditional banks. They have been abused in the form of fees that are too high, sometimes lending that was just not right, giving people loans that shouldn't have them, not giving loans to people that should have them. And so by working with fintechs that set out to right those wrongs and sponsoring them, it can be really, really cool, right? I mean, if you go into the world of investing, because of Robinhood, we don't pay brokerage fees anymore. Because of players like Chime, most banks have eliminated overdraft fees, right? It was the competitive pressure, but it took fintechs ultimately to make those changes on a large scale. And for a small bank to empower that is huge.
I love this. So I actually called him after we talked last time. I'm like, the way that Robert said that was like the most inspiring way I've ever heard a banker talk about banking, right? And he said it last time is, we all here know it's the big banks that are the bad guys. I'll say it. I hate them. But that's given banking a bad name. That doesn't mean that we haven't all made mistakes, right? The banking side, the vendor side, I mean, goodness, we've all screwed things up, right?
You don't want to tell somebody on a first date that you're in banking.
Of course, right? But I love Robert's viewpoint here is that sponsoring these fintechs, it's like a way to be a social justice warrior and reinvent banking, kind of rewrite those wrongs. For a community bank to sponsor them is sort of a way to sit behind the scenes and do what you do really well, right? And we talked about earlier, the reg and everything else, and give the fintech sort of that frontline marketing brand push and go use it against the big banks. You grabbed me with that when you talked about it, man. It's really full circle. I love it.
But there comes a certain responsibility with that too, right? And that's one I'm kind of grappling with right now. Because a lot of these, you know, neobanks, let's call them that, right? They make their living for the most part of interchange and the occasional small fee, right? But if banking were that easy, if you could just make a living on interchange and a few small fees, well, then banks wouldn't do loans and take savings accounts and whatnot else anymore, right? And I think that's where some fintechs are a little bit too narrow-minded. They have to start looking at what else, because what if Durbin gets repealed, right? And suddenly you get regulated interchange. you need to make sure is more to that business. And I think that's a little bit of the challenge for a lot of sponsor banks. You kind of take the typical mindset in just about any field. Most people have that scarcity mindset, right? I got to take anybody because I might be missing out, right? And I think that's where it's on the sponsor banks to become more selective. Get those that actually have the right business sense, the right plan. Just because they're saying, I want to issue a contactless payment device doesn't mean they're going to succeed. Right. Even if they have a great product, but no business sense, they're not going to succeed. So find the ones that are most likely to succeed, but then prod them along and help them to kind of future-proof their business so that it's not all of a sudden some, change in policy or regulation that puts them out of business.
Something that I think that, banks is, let's just talk about, hey, Mr. Banker, I want to talk to you just a second here. Mm-hmm. If you want to fight back, well, the money's in 4 banks, we all know it. They're the ones that have given our entire industry a bad name. They weren't there at PPP. They didn't, I could go on all day. So here's the deal. We have, zillions of fintechs trying to get into this space and a very few number of sponsor banks. It's very, very easy to become a sponsor bank and very, very inexpensive today. Now, don't go ask somebody, how'd you do it 10 years ago and how'd you get started? That was a nightmare.
It's difficult.
But today, we got one we set up a couple of weeks ago, $100,000, and guys up and rolling. Okay. It's not that hard. That we can help you find them. They will come to you once they know you're there. This is not hard business to start.
And more sponsor banks is good for community banking.
So here's the deal.
Okay.
These little entities, companies are just like a business client. Okay. So they're just a business client that takes money away from JP Morgan and Citi and those guys. You make money doing it. So if you want to kick their ass, become a sponsor bank. Yeah. It helps everybody. Who's one of your big customers? I know who it is, but I want you to tell everybody who it is. Who's your big guy?
Well, you look at the public filings, right? Marqeta is the big one, right? And they identify that in their filing and everything behind them, right? That's big. The other bigger names you probably have heard of is Robinhood and their debit card program, right? That's pretty sizable.
Let's just say gazillions and gazillions of cards.
Gazillions. Yeah, there is tens and tens and tens of millions of cards that we have out there in market that we sponsor. But let me throw this out, right? This is sponsor banks have to get away from this mindset of scarcity because it frankly is rare for us to actually compete against another sponsor bank. That happens seldom. And one of the things I often point out is, and again, might not be the most common response, but sometimes when a fintech gets larger, I say, if I put my business hat on, forget my Sutton hat for a moment, you pretty much should have a second sponsor bank. That's just sound business, right? Yep. And so I think for that reason, it makes sense for like-minded sponsor banks to sometimes team up, right? If you have a really, really large program and suddenly it might take you a while because too much in deposits coming in, you got to figure out how you handle that. You sweep it, you raise capital. To have another bank there that can, pick up the slack and not slow down that fintech is great for everybody involved, right?
And the 10 million hump with dirt.
I got to jump in here. This is the point I drive home all the time to everybody. It's not how do I find a fintech? It's what the hell do you do if you get a really successful fintech? And he's bringing in so much deposits, and he's bringing in 35,000 accounts a month, and it's like holy cow! And all of a sudden we got a capital issue. And again, to your point, call another friend. Hey, you're a sponsor bank. I know you. Can you take on this guy? And he's like, yes, I'd love to take that guy. Or call us. We'll tell you another bank that's saying, I'm a new sponsor bank. How do I take some? I'd love to have some.
Everybody's happy to share.
And there's asset side and there's deposit side. So there is a balance that goes on here. And to your point, sponsor banks are not highly competitive against each other. They're more specialized in trying to work together. Everybody has the same balance sheet issues.
It's big banks versus small banks when you really get down to it, right?
Yep.
I love it.
It is. And, just to, you mentioned what if you have someone adding 35,000 accounts? Our issue has been more, what do you do when someone adds 500,000 accounts a month after month, right? That's when you really got to watch things. And And I think overall, some of those dynamics are the reason why I thought, it really would be great to have this industry roundtable that kind of sets certain standards. That way, you don't let the fintechs kind of run over you because they think technology solves all problems, including and gives you the right to ignore regulation, right? So I think if the right banks kind of set the standard, here is what really needs to be done, and enforce the direction from regulators, that's good. But at the same time, when you have those situations where in order to support a fast-growing fintech, it makes sense to partner up, to have a group of like-minded banks that uphold the same standards, everybody wins.
That's the big
Well, not everybody. Some of the big banks might not, but for community banks, it's good, right?
It's crazy to be filming this right now.
Knowing the meeting that's
we
coming
all
up.
know that 7 days from now,
Yeah.
what's about to happen.
It's very cool.
With everybody coming together. And that's exactly what you just mentioned, and the opportunity zone there, not only for the existing sponsor banks and to yourself, the point you made that was really good there was to protect each other
You bet.
from a compliance disaster. What happens? You get a really nasty compliance situation out there.
It sinks everybody.
And CFPB says, boy, we need a new law, we need a
Yeah.
new regulation, and it really screws everybody because of one bad player. But to your point, if we set some agreed upon standards, that's not, you're not talking about complicated issues here. We're just saying like, okay, like
Basics.
Don't let the cows run free.
Right.
And keep things under control.
But I want to give you a chance. Final thoughts. What have we not covered, talked about? What's on your mind, man?
Well, I think my final thought is when it comes to the audience here, right? Community banks is, especially if they are more in the rurals like we are, the world is changing. You got to change with it, right? I mean, if I look at some of Sutton's typical target market, small family agricultural lending, right? Family farms are going away. You have the big agricultural conglomerates that buying them up. They're not banking with Sutton. They're banking with much larger players, right? And so on top of it, you find the big banks as they hit the end of their pipeline runway, they're looking to where do we go? So you find more and more they push into the rurals, right? And so if the community banks don't change how they do business, they're definitely an endangered species, right? So I think for community banking, it's almost a must that you embrace fintech, that you partner up with it, sometimes guide it in the right direction, but that way, I think you have a viable business model. And particularly where it gets interesting is, I mean, right now, today, everybody's already talking about, oh, now we got an inverted yield curve again, right? 5 years low, higher than the 30-year, and problems. Well, with a fee-based business, like we have on the payment side, you have a much more predictable income stream. You can pretty much say, I spend $1 today, here's when I get it back, and here's how much I get back. And it doesn't necessarily matter immediately where interest rates go, right? If there's loan demand or whatnot else. And it's a great way to have a much more stable basis for a bank, right? To isolate it against some of those other fluctuations and influences that create threats. And I think that's a great thing. And by partnering up and tackling this space together, everybody can win.
And nobody has done a better job of the things he just mentioned than Sutton. Yeah. You guys, I mean, hats off to you. We appreciate you.
We're talking about a little old bank out in rural Ohio, basically an ag bank that turns into this monster sponsor bank. And he's turning around saying, guys, if I can do it, you can do it.
I love it.
And there's people like us, everybody here together to help. And the opportunity zone that is there right now for community banking. This is a window every other generation that opens up, a moment in time where you can just make tons of money. When everybody's sitting here going, gosh, what are alternative ways to make money? Call us. We can show you 1 million of them.
It's right here. It's right here. Yep.
Yeah. And here's what's really neat, y'all. I want everybody to understand this real quick. Robert is not here because we paid him. He's here to help you. And to have people like that, I mean, we bring this every week to people. There are people out here that are dying to help you.
We got good guys.
And I'm not trying to say pick up the phone and beat the hell out of Robert. I'm just saying, guys, we have to work together here. And there's people out there that have done it, are experts at it. and really unique that he worked at the banking side, worked for Fiserv, worked with OnDot, worked with all these different things, and then came back to the Sutton side of things, now running the sponsor bank. It's not for a lack of experience. And to be able to say, I can help, this is how this works. We can get through these things with your board. Failure to start is what's killing them.
I agree.
Do you agree with that?
Mhm. Absolutely. Absolutely.
Thank you so much for
It's-
all your time today. And I think we probably took too much of it. Gosh.
Oh, was a pleasure, guys. And I'm
Yeah.
looking forward to more collaboration down the
More
road
to
too.
come, man.
We're just seeing a lot more of
I
you.
know, man. It's good.
Yeah.